Welcome to Ask the Experts for today, Tuesday, 23rd of August. My name is Capolingua. I'm the market analyst over here at Think Markets Australia. It is a pleasure to be with you as we, throw the floor over to you, get your portfolio questions answered. Hopefully I can shed some light on the goings on in markets at the moment. We're going to look at TWE as our first company. And because I was just doing some analysis before the start of the session, it's important that I go back to my default zoom so that every chart I look at today is going to be on the basis of a consistent level of zoom, because I do think it's very risky that you look at a stock like TWE, you zoom in, do some analysis, I really love that candle and I hate that candle over there, and then you get to the next stock, whatever it might be, let's say Tyro Payments. What you've forgotten to do here is to zoom out and check out Tyro's overall trend. Okay, so before we go from one stock to the next, it's important to get back to your default zoom. My default zoom, you can see here, is about 18 months off the top of my head. Sounds about right. I'm going to make one little adjustment here. Looks wonderful. It's one I have tweeted about for a little while now, and importantly, I think it has dispensed with this what was an old supply zone, and basically that supply zone exists until that point there where we close above it, and potentially it acts as a demand zone going forward. Not always, but that is what I would expect, as people who regret exiting in and around this level start to feel, well, actually this thing can go much higher, and they tend to try and buy back in around there. So that's all positive. Today's candle is not ideal. Obviously black candles tend to indicate there is more supply than demand in the system, but it is still a live candle. That's the other important thing. So at 1:04 Eastern Standard Time, we've still got another 3 or so hours to trade on the market, and that candle will change. So it's important to, I wouldn't say necessarily ignore that candle, because if you're looking at markets intraday, I mean, what's happened up to that point, has some relevance, but you're better off making any final decision to trade upon a candle that is at least very near its close. Okay, so within the last 10 minutes or so, if you wanted to get a jump potentially on trades for the next day. Apart from that, I do think that the short-term trend looks very, very strong. You can see that let me just make some adjustments here so we can actually see some of these arrows I draw on. There we go. So the short-term trend here is very, very strong. You know that because obviously the short-term moving averages have crossed to the upside. The ribbon is getting wider, it's expanding, so there's some acceleration in that trend, and the long-term trend also is now established and starting to accelerate as well. So I'm happy with this. No major complaints here. The only thing that would stop me from buying, because I think it's a solid hold. So if you've got it, congratulations, you're already there. I think, let it do its thing. It might have a little bit of a pullback here, some weakness after the big rally, but as long as it doesn't pull back too much, I do think it'll go up. I'll talk about that scenario in a second. The reason why I can't call it a buy just yet is because it is quite a ways away from my value zone there. So my short-term value zone, I like to buy. You can see here exactly what I'm talking about. So when we have a nice rally, we have a rally, we have a little bit of consolidation here. We just let the market catch up to itself, get its breath, coil that spring even more, and we like to buy in an uptrend or an establishing uptrend at or around our light green zone. So this light green zone is going to continue to move. It's dynamic. It's a dynamic support zone. It will continue to rise as it catches up to where the price is. And as I said, potentially that scenario there, I'm just going to get rid of some of this stuff so I can draw a few more arrows. The scenario where we see a small pullback, and it might not even be on a closing day basis. So you might see a candle that kind of looks a bit like this, and it has, say, a shadow pointing down into the zone as the zone continues to improve, and you might get a candle like that, and then you'd be happy to enter on that basis. But for now, look, yes, solid hold, but just waiting for another strong signal, I think, to get in. Happy to play the game that it will pull back rather than just continue to run off and make me regret that decision of waiting for a pullback. Let's have a quick look for you, Faye, at the Treasury White Estate valuation. So what I can do here is I can head over to my Thomson Reuters Refinitiv Icon spreadsheet. So it's a spreadsheet that you download via the application here, which is Refinitiv Icon, and then you can manipulate it. And so if you got this, and it's about $2,500 a month, mind you, that Think Markets pays for to give to me to give you this information, it wouldn't come with any of my valuation stuff. So this is all extra formulas and herbs and spices that I've created to help me understand the value within a company based upon the historical data for the company, and these are all actual numbers that the company's reported as collected by Thomson Reuters, and then Thomson Reuters go off and they also collect broker consensus numbers, and that's the future estimates there. So they come from, in this case, 16 brokers. So we're talking about your Macquarie banks, your Credit Suisse, UBS, all of those types of brokers. Goldman Sachs is another one. And of these 16 estimates, they provide the various financial data going forward, but also a rating. So strong buy in this case, 3 of those 16 brokers are at strong buy, 7 are at buy, 7 are at hold, and 1's at a sell. So you would say that's somewhat of a polarizing stock, and brokers tend to also provide a target price as well. So here we can see that their target price of $13.74 allows a 1.7% upside. Now that is based, unfortunately, on yesterday's close, because the spreadsheet only updates after the close each day, which kind of makes sense in itself, doesn't it? So do understand that the price could move from there and therefore change some of these percentages. Now, in terms of me getting a valuation of this, first line I go to naturally is just to look at earnings per share, and I like to see earnings per share growing, because we can talk about revenues growing and EBITDA growing and all of these things, but at the end of the day, this is what shareholders get. So earnings per share, and I also like to look at historical growth as well. So I'd like to see a trend. I'm a trend follower, and we can see that the trend here isn't that fantastic, because in June 2018, obviously 51 cents, then 60 cents. That's great, and then the pandemic hits. China slaps a bunch of tariffs on, and we have a bit of a downturn. But given what they faced, I'd suggest actually not too bad, and they are back to a little bit of growth. That growth is expected to continue. So obviously we've had the full year results already in the bag for Treasury wine, and then next year you can see some strong earnings growth coming back to the order of magnitude of 30%, and then continued growth from there till we get to 76.4%. Now, in terms of the compound annual growth rate, don't worry about what I'm doing here. It's a little bit of maths. This particular version of my worksheet is still a work in progress. I'm still playing around with some of the formulas. But what that is telling me, that from the current earnings that were just delivered to FY26, and that's a great outlook window, isn't it? We've got 14% annual growth rate, which is actually a really good growth rate for an Aussie stock. And now you're probably expecting somewhere between 5 and 10% would be reasonable growth. Once you're getting sort of 10 to 15, you're actually getting some nice growth in there. In terms of the risk level, without breaking down the company, going to its financial statements and reading reams and reams of information for it, it's hard for me to say what this is, but what I can do is give you an idea of, well, if you've done that work, if we are at a low risk rating, what my valuation is, and this is my valuation. So take that with a pinch of salt. This is how I view the world. The other thing I like to do is find what an appropriate PE is, and the default setting here is usually the right one, but in some cases, because of the mess that the pandemic left us, in some cases, historical PEs can be very different from current and future PEs. In this case, they're not crazily different. I mean, they were around, mid-20s, mid to low 20s really before the pandemic, up to about 30, and even then that's not a huge increase. And then we're probably expecting sort of mid to low 20s from here. So a PE of 20.6 I don't think is unreasonable, and I think actually is holding Treasury wine estates to quite a high account based upon historical PEs. So I would say that everything here looks pretty good in my valuation. There are no sort of real outliers to tell me that there's this valuation's at risk, and therefore at a low risk rating, 1461 looks pretty cheap down here, with a dividend yield of about 2.7%, giving you a total shareholder return in excess of 10%. Okay, so if the chart looks good, the valuation gives you more than 10% upside. You as a broker, speaking necessarily for Think Markets, but your Goldman Sachs, your Merrill Lynch's, your UBS's, they will generally. So scratch that. They don't care what the chart looks like. Okay, scratch that bit. They have no idea what the chart looks like. They will say if there's more than 10% total shareholder return, there's a very good chance they'll put that in the buy basket. Now, what I do, if the chart looks good and you've got this 10%, that's when I start to go to a buy. Now, if you are a bull on Treasury wine estates for whatever reason, let me just show you what it looks like with a moderate risk rating, okay? And that is me increasing the discount rate, the hurdle rate for this investment, okay? And that does put a bit of a dent in it, and you have to decide what you think at the risk level is. It brings it back to fair value, which I suspect, based on what we can see here, is probably more like what the brokers are using. They're probably using a discount rate similar to what I've got behind the scenes for here. My discount rate will change based upon the risk-free rate. So, the 10-year bond here in Australia and America, and that's part of my secret herbs and spices. But it is based around, having worked in the industry now for 20 years, I know what these guys are thinking and how they operate. So you could split the difference and say, well, there's 4 or 5% upside. But I think it's supportive of what we see on the chart. And that should be the case. Now, I know I've spent a bit of time on Treasury Wine Estate and explaining things, but it's about laying a foundation in Ask the Experts at the start, so we don't have to spend so much time in as we go. The next one is from Craig, and we're going to go in a completely different direction here. Paladin, couldn't get two stocks more categorically different than Treasury Wines and Paladin, who is a potential uranium producer. And they do have a uranium mine in Namibia called Langer Heinrich, which is on care and maintenance at the moment. That means that they've got a bunch of uranium in the ground, but the cost to get it out of the ground is greater than what they're getting in terms of uranium prices at the moment. So they are spending quite a bit of money on just keeping that plant sort of quasi-operational or maintained to a point where they could get back into operations, but they will still need a significant investment. And off the top of my head, somewhere between 50 and 100 million, I know I'm using a wide range here because it's off the top of my head, to get this plant up and running again. So that's the background on that one. But it's better, I guess, than a uranium company that is just exploring at the moment, just kicking over rocks in the desert. And typically, even if you found something in that rock in the desert, it could be 5 years before you get to mine, okay, and that's a pretty conservative estimate. So we've got a bit of a bonus there. You can see we've done some scratchings on this one in the past. I've drawn this big trading range that it's in. I think last time we looked at it, it was breaking to the bottom, below the bottom of that range. I probably got bearish on it. Since then, the broader market, including the materials sector, has rallied. This one's rallied a bit, but some of those material stocks have had extraordinary rallies. I would put this in the mediocre category. The long-term trend is flat. I don't think you could argue that it's up or down, to be fair. The short-term trend has improved. It's back to up, but with the price having fallen below it, it's not a good sign. Last couple of candles showing a little bit of demand in the system is somewhat encouraging, and the fact that, there are a few white candles lurking around is okay, but I don't think I'm going to get past an okay on this one. It's not one of those screaming buys. It doesn't have the fingerprints of demand. Think about how demand manifests itself in the markets. Lots of white candles, lots of lower shadows showing buy the dip, higher peaks and higher troughs showing that when we pull back, we don't pull back as far as we pulled back last time. And when we make a gain, we go further this time than we did last time. These are all good signs of that demand is in the system, and that the people out there with cash view your stock as the opportunity they want to be on, because there's plenty of opportunities out there. Don't forget, it's this idea of opportunity cost. Okay, what does it cost us to be in Paladin? And I'm going to say that given this is so darn sideways, people aren't exactly falling over themselves to get on board. They're not falling over themselves to get out either. So there's an element there of hold and see and hope. And I don't really want to play that game. If you're holding it on the basis that you know the story very well, I can't see any reason why you wouldn't continue to do so. If you didn't know anything about it and you were saying, is this the best place to put my money right now? I think you're going to struggle a little bit. I don't think there's the case there in the chart. That is the demand supply dynamics. to warrant an investment at this time. Now, where could that thesis change? I think if we get above here, it's going to start to look quite good, actually. That high there, it's 79 cents. So close above 79. Let's talk about it then. Until then, why go through all the potential scenarios? Now, what I'll do here is quickly check the uranium price for you. I think that's relevant as well. We can see what Paladin is running off, or not running off, is probably the better way to put it, because they need these uranium prices to go up to make Langer Heinrich economic and, obviously to get back into production. So with the uranium price as sideways as it is, it's maybe a bit of a tough task for Paladin to show any great, burst of demand until this picks up. Having said that, if this picks up, and there's no reason why it can't, I don't think this looks bullish or bearish, it's so sideways. The overall trend, I think, is still up. Short-term trend is putting pressure on it, however. But, if it got back into even to the low to mid 50s, I think would be enough to probably spark up that uranium story. If it was to close, say, below 45, then unfortunately, I think we are turning that uranium trend. Let us move on to the next one, which is from Andrew, and it is going to be NRX, which I must admit, it's not ringing any bells for me. But I know Andrew likes to find these little turnaround plays that are just starting to show those fingerprints of demand. Now, I didn't look at the Paladin fundamentals for good reason. I don't think, it's so contingent on that uranium price. We don't have any earnings right now. It's a loss-making enterprise at the moment, and probably for the next year or two. So without profits or expected profits in the very near term, that valuation spreadsheet simply doesn't work. Now, Noronex, never heard of this one, but I like it. Andrew knows what I like to see. Big white candles, big volume push to get this thing going. Wouldn't surprise me though, Andrew, if we maybe took a bit of a breather though here for a couple of candles, maybe even a week, maybe a couple of weeks, as we just consolidate this gain, because you've got all this dead wood in the system, okay? All of these people who it just got worse and worse and worse. We know how frustrating it is to be holding on to a lousy stock, all right? Insert your, in brackets, lousy stock here when we're talking about this. And just hoping every day it goes back up, but then watching at the end of the day, the closing price is down, is down, is down. And when will this thing ever go back up? It will never go back up. But I tell you, if it does, I'm out of there. I'm out of there, and I'll never trade Noronex again. So what this creates in the market is a bunch of dead wood. Really, they're just, I say, waiting. Okay, I've probably got lots of spelling mistakes today because I'm rushing, waiting to die. Okay, they're waiting to die. That's all they're doing. And this price rise gives some of them the ability to do that. So as that supply comes into the market, we might see a little bit of a pause. Is there lots of demand in the market? Absolutely. It's clear as day. The demand, which is there, meets some supply, opportunistic supply getting out, and we go sideways. And then your next move is key. And I know this is all hypothetical stuff, but just painting a picture for you. After that consolidation, if we were to then move higher, I think 100% get on board. If it was to move lower, then it's a flash in the pan. But when you're going into these things, the risk level, right? You're not betting, so XXXX, betting the house on this type of setup. But also, don't be afraid. Don't be afraid of having a little go, because clearly something is going on here, right? Something is going on, and the demand has returned, not for no reason at all, but it's there for a reason. So why not just keep an eye on this one? So I'm not averse to these at all. It's just a matter of finding an appropriate entry point, and 4 up days straight for me is not it. I need to let's. And the great thing about a big demand event is it tends to flush out supply, right? Nothing flushes out supply better than the price going straight up, right? And this is what I love as a technical analyst. You love these because you then get to have a sneaky peeky at how the market, well, not really the market, isn't it? Actually, it is the market. I was going to say it's supply. No, it is the market. It's how the market responds, responds to that demand event, because it is both. It is not just a potential supply response. Obviously, that's an issue, and that's what I've just talked about here. The potential supply response. The hooray! I can get the, I'm going to swear here, F out, right? Because I can assure you this is how people feel, right? Finally, right? And if we don't pull back much, it's just these guys and gals getting out, right? If we pull back the whole way, well, it's stuffed, right? Let's face it. But it's also how the demand side reacts. Because if we don't get a lot of supply, the demand side starts to build. Because let's face it, the normal thinking when something goes up is, oh, it's too expensive, we have to sell, okay? But if it goes up and it holds and more demand comes in, demand is saying, you know what, it's not expensive. That's the thing. It's not expensive. Expensive. It's hard to type and talk at the same time. It's not expensive, right? If the demand comes in after the price stays up, it's not expensive. It's cheap, right? But your average person doesn't realise it because they go, oh, price went up. Price of lettuce went up. Lettuce is expensive. No, stocks aren't lettuce. If the price of a stock goes up, it doesn't naturally automatically mean it's expensive. It means it's good, right? So buy more. You don't buy more lettuce when it's $10 a bunch of lettuce, but you should buy more stocks. I think I got a little bit off topic there, but I reckon, Andrew, it probably answers your question. Let's go to JS asking me to look at Air New Zealand. And generally when I do those size and ask the experts, I probably can just go to the next stock, can't I, JS? Look, there's some signs here. There's some signs of life, but it's so feeble. I can't get excited about this one. I just think even if it does go up, it's going to be such a hard slog. And then there's all this, you know, you've got to have supply in here. How do I know you've got supply in there? Well, that's, I think, where they did the big placement, isn't it? So if you copped the stock here, right? Think about how clever you felt down here. You're not feeling so clever anymore, are you? You're thinking, holy moly, all I want to do now is just get out at break even. And where does their break even point kick in? It kicks in around here. So this is break even, and what that creates, unfortunately, is a lot of latent, not latent as in, come on, latent Hewitt, but latent supply in the market. And why do you want to fight that? I've been around too long, everyone, and I just want easy trades. I don't want hard trades, and this looks like a hard trade to me, so I'm a pass on that. But hey, for completeness, let's go AIZ. And I actually don't think I'll get anything here, to be honest, because I don't reckon it's got any earnings for us to analyse until here. I can do some tricks on this one. June 23, in fact, it's already doing that. I've got a PE here. I know what it is. We need to. It's good because I need to reset this each time. I need to go here, and then I just change this to 2. If you know how to calculate a compound annual growth rate, you know what I'm doing. Why is that 0? Oh, because this is negative. I can't even get that. It's too hard. It's in the too hard basket. Okay, I'm moving on. I'm not going to waste any more time on Air New Zealand. Let's have a look at CNJ. Oh yes, Andrew. He topped up underneath 6 cents. Okay, no reason not to. And we know how to read these charts now, don't we, Andrew? Like the market's saying, well, no reason to get out here. You know, keep looking. Like if you're looking in your portfolio, like you're scanning through your portfolio. So let's say here, these are the stocks in your portfolio. I'm looking through my list at the end of the day, whatever it is. I get to Conico, I go, okay, keep moving. Nothing to see here. Nothing to do. Nothing to see. Nothing to do. Having said that, just be careful of this bit here, Andrew, because there's going to be a bit of supply here. That's I think something you need to note. Apart from that, looks great. No complaints. I would continue to hang on. Now, this is a live candle. This one here is a live candle. Actually, 20 minutes past the hour. This is what we do each Tuesday, don't we? I click update around here, and you hear me say things like, look, the candle is still going to change around. That shadow that's just developing up the top there could get longer. Hey, it might get shorter. We might have a higher close. It got a little bit longer, isn't it? So just keep an eye on that one, Andrew. At the moment, I don't think it's anything too sinister, so continue to stick with it. Okay, TER. Let's have a look. Oh, magic. A little bit of a shadow there at $1, isn't it? Now, what do we do at a $1? What do we do? I'm going to say that because we've kind of already had an event here at around $1, 95 is pretty close, and we had that big supply event, I think a lot of people have come to terms with $1. It is having an impact. I mean, it is having an impact. Clearly, there's a little shadow here. There's a little shadow here. And there's a little shadow here. But then look at the demand side. Remember I said a big demand event is good because you get to see how the supply side responds. Well, supply is not bad either. You get to see how the demand side and the supply side respond. I think the demand side's still pretty confident here. I don't think there's anything terrible going on there around $1 to say, oh, well, okay, round number, compulsory exit. I think we've been here long enough that, the market is not too fussed by $1. And I know I'm spending a bit of time on this because I probably don't need to, because the overall trend is so good. I think $1 is not going to be a major issue here. Okay, tick, white candles, good price action, no complaints, absolutely hold for me. Could you buy it? I don't see why you can't buy it. Yeah, with some nice full white candles, strong closes, it should keep going. Where's it going to finish? Hey, I don't know where it's going to finish. The whole coal trade is just about hanging in there as long as you can. You are on the wave, right? You're in Hawaii, big wave surfing. You've just jumped onto this thing, and hopefully this is a big wave. I mean, let's think about this coal move, potentially once in a generation. What's the thermal coal price look like? Let's have a look at that. So here's the thermal coal price. You can see it looks pretty similar to the Terracom chart. Surprise. Who would have thunk that was going to be the case? So, but where's the coal price going from here? So probably no point talking about where Terracom's going from here. Where's the coal price going from here? And let's face it, most people look at a chart like that and say, oh, it has to go down. Maybe, and probably will, but it might go to 1,000 before it eventually goes back to 100. Will it go back to 100? 100% it will. Will it get to 1,000 first? Maybe. And I think this is building as we get closer to that Northern Hemisphere winter. I think this is just building, and there does not appear to be any resolution in sight for the Russia-Ukraine situation. Maybe that's a little bit at odds with what some people were hoping for. They're on the wrong side of this market. Europeans will want to keep warm. That's my tip this winter. And with natural gas, let's have a look at the natural gas price. Here's the natural gas prices, right? That's not getting any better either. Coal is the logical, natural alternative to move there. So we go back now to Terracom. I'll probably head off a couple of questions down the list, and we will look at Whitehaven Coal, for example. Magic. I haven't told you to sell any of these, which I hope you're still there. And remember I said, I had my analogy about the big wave. We're on this wave, so your job is to have a bid on this wave for the whole wave. Okay, don't be that person that goes, oh, my stock is up, hooray, finally I got one right, and get out here and pat yourself on the back. I got in here, I got out here, and aren't I a clever clod? Like, how clever am I? Look at all the money I made, what a genius, and then this thing goes to $20. It could, who knows, $20, it might do that, and all the people will look back and go, oh my God, why did I get out so early? Your job is to still have some on this at the end, and you might hold on too long. It might go to 20 and you get your last bit out at 17 after it pulls back, right? And it starts to break the trend, so what? But don't dust your whole stack in these. There's nothing in there to tell us to get out. I mean, look at that. In fact, it's still telling you to get in with these demand candles. Okay, this is the fingerprints of demand that we talk about are all over this thing. Let's have a look at New Hope. Enough said. Okay, let's go to the next one. DGL for King. It's going to be tough now, isn't it? I suspected that the DGL chart was not going to be anywhere near as good as the last three you looked at, and I'm right. It's going to be tough going for Ask the Experts for the next 30 minutes because, that's it. We've peaked. Okay, it's all downhill from here after you look at those coal charts. It looks okay, King. It looks all right. But you know, look at those black candles. Even this is the funny or weird. Not funny as in haha, but funny as in weird. Look at this thing on the way up. It somehow went up almost every day with a black candle. What is going on there? How can you go up with just everyday black candles? It can occur. For me, when I see that, it just reeks of insiders getting out, right? Insiders who are in, let's face it, sort of seed capital, founders, early investors. They've just got a sell order. So the way sell orders work is, it's an algorithm. There's an algorithm. So you give your sell order, if you've got a huge bunch of stock, you give it to your broker and they just tick, 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 tick. So, we had broader market rallies, let's face it, for most of this period, to be fair. So the market goes up. Maybe there's some talk on chat rooms about it. But then by the end of the day, so it opens high and then it just gets beaten down by the end of the day as those algorithms, the algorithmic trading continues to sell the company throughout the day. Having said that, once they kind of flip back to white candles, it tells you that those orders are out of the system, and then they can be really good. And this doesn't look terrible. I mean, I reckon for the first time ever, we've got, if you count them, did a ratio, you got more white candles than black candles. I think I've spent too long on this. I don't think I'm going to get to a buy. I can get to a solid hold, but I don't think it's the one, King. I don't think it's the one. Let's have a look. Let's have a look here at the valuation for DGL. We'll see if we get anything. We do have earnings and not a lot of information, so not a lot of broker coverage, just the three brokers there. One strong buy, one hold. It's a pretty new company, so this is that's why it says unable to whatever. It can't get the data. The data doesn't exist. Now let's go back here and then make sure we've got for the current year to the year that we can get, and it is 2 years, so that maths is right. So we've got a 9% compound annual growth rate over the next couple of FIs, which is pretty reasonable. We've got a PE, which hard to say. We don't have any historical PEs. It was 14. It's now 23. What should it be? I wouldn't have a darn clue. But I can tell you, a generic 9% compound annual growth rate stock without a dividend yield, I would struggle to pay more than, say, 15 times earnings. So if I put 15 in here, this is going to get real bad for DGL, right? So I'm going to say that even at a low risk rating, my valuation model is broken. We just need more data. We just need more data to make it work on my valuation model. Not to say that, DGL's bad, just the models doesn't work for everything. Okay, Jimmy saying, hey Carl, are you running these on Tuesdays and Thursdays? I could start running one on Thursday. I did promise to do one just for Think Markets clients, so leave that with me. And yes, there's a possibility of running one on Thursday. I only ran one on Thursday last week, Jimmy, because I had some annual leave and I wasn't around on the Tuesday. This one's from Aidan. Welcome, Aidan. This is Aidan's official first question. Well, I wish you had asked about this one, Aidan, LAU, because LLL is not coming up. It's not coming up in my list. Doesn't mean it doesn't exist. It's not in this list. But I tell you what a monster that is, Andrew. Check that one out. Let's go to LLL. It's still not. I can't find it. I can't find it. Sorry, Aidan. Let's go to Therese. Teresa, this might be your first question as well. SLX, still a monster, Teresa. I still think it looks really good. However, there's the deep breath and the however. It's spent a lot of time up here, hasn't it? It's spent a lot of time. Let's have a look at some of these candles a little bit more closely. And I'm seeing a bit of supply in here. But there's plenty of demand as well, and we're just kind of stuck in the middle. I think it's a solid hold. Like, I can't see any reason why you'd panic out of this at this stage. I think it's a solid hold. I can't buy it though, because there's just not enough good stuff going on in terms of the right candles. But if they were to occur, they'd occur in this zone. So obviously, this is the zone I'm looking for them to occur in. Just a bit sideways. Yeah, look, if you've got it, Therese, I can't see any reason why you'd sell it. If you don't have it, I think let's string together some nice white candles, a few solid white candles coming in here. There's clearly supply here. I mean, there's clearly a programmed order, a big seller, sort of just sitting on this. So far, the demand side is able to soak it up. Okay, so far the demand side is able to cope with it. Somebody's got to win this battle, and I'm just not sure if I want to, as a new investor, come into the battleground, and take the punt that the demand side will win. But as an existing investor, I think you have to give it the benefit of the doubt and say that's still holding very well. But you would scrutinise, say, a close beneath here very closely. So this is where you might start selling. That low there is 291. So close at 290 or lower, I think it'll be in a bit of trouble. To the upside, obviously closing above 360, then it's all happy days. Okay, very interesting, worth keeping an eye on. I don't think we're going to have any earnings coming through on Silex just yet from what I know about the company, but let's have a look. And we don't, so I won't be able to value this one. Let's have a look at the next one, which is from Ajit, and Ajit wants to know about BCB, which, if I'm not mistaken, is Bowen Coking Coal. Okay, looks pretty good, pretty happy with it, but Ajit, you will not. And it's pretty rare I talk in absolutes and ask the experts, right? I normally give you lots of fluffy maybes and sometimes, but you will not see Bowen Coking Coal do as well as the other ones. So ordinarily, you look at this and you go, ha, this is the one. This is the one because it's got that word in it, okay? And I know coal prices are going up. I have to get on board. Europeans want to keep warm. Okay, well, the problem for Bowen is it's also got this word in it as well, okay? So this is not the thermal coal stock that the other three are. This is a coking coal stock, and coking coal is used in the production of steel along with iron ore. Now, iron ore and coking coal are going to move based upon global growth, okay, or lack thereof. So we have seen a bounce, and having said that, we have seen a bit of a bounce in the coking coal price, but really it's completely different from the thermal coal price. So it did peak out post Russia's invasion of Ukraine because there are some supply side issues based around Russian coking coal coming out of the system. But it very quickly it pulled back because my tip is that China's a bit stuffed. Okay, and they are the major consumer of coking coal for steel production. There are other significant producers, but consumers, but China is the main one. So off 635, we saw it bottom out at 200. We've seen a little bit of a rally, probably a relief rally for me. And the next problem is here when we get to that 350 mark. Okay, if you're wondering what the iron ore price looks like, it looks like this here, which is not exactly screaming demand all over it either. All right, so we can't look at something like Terracom, which does have some coking coal, mind you, but mainly thermal coal is where the money's coming from at the moment. Whitehaven, New Hope, and then at the same time look at BCB and say, well, BCB's got to go up because the other ones have gone up. But having said that, I think the chart does look good. It's a solid hold for me. Would I buy it? I'm just a little averse to buying coking coal stocks at the moment. And I know that's me not looking at charts and looking at fundamentals and my view of the macro theme, but that's where I'm at on these coking coal stocks. I don't like them as much. Let's see if BCB has any earnings going with it. It might not even have any broker coverage, just the one broker coverage here, as we can see. And I'm not going to muck around with that. My spreadsheet's not going to work too well with your negative earnings here. But look, we can see there are going to be some earnings there and looking like some reasonable growth in the near term, however. And the chart is supportive. Okay. Let's keep moving. TLX, I haven't looked at that one for a little while. Happy to do that one. Oh, look at this. So last time we've drawn all over this one. Last time it was up here. We didn't quite get to the supply zone, did we? And it's tanked. And I'm guessing maybe some news announcements have come out. I haven't followed this one, so I can't say with any certainty. But yeah, your supply event was here. That's a little bit concerning because obviously it's coming in underneath this one. And I wouldn't say either of those in isolation are reasons to panic. This gap down is not good. Okay. but certainly here, I think we're done and dusted here, and we are 100% finished here as we break below here. So in terms of this uptrend changing, it has changed, and they were the signs that you could have used to manage your exits, as we say. Okay, so a lot of stocks we've seen going up today, like a Whitehaven, like a Terracom, eventually those trends will end, and they will end in a very similar fashion. How about this? I know. Oh, there it all goes. I haven't done that for a while, but I just want to just show you some of the things you need to watch out for when trends change. I'm not here every day, obviously, to guide you on these, so it's important you have the ability to look at these things yourself. So there's your change in peaks and troughs, okay? And as I said, that in itself is not enough, okay? But breaking beneath this trough here, I think puts you on alert. And in addition, the gap down, okay? That's not a good sign. So if you're looking for signs, your uptrend is changing to a downtrend. I'm just trying to give you some pointers on what to look out for, okay? Then this candle here, and the key here is that your second supply event, all right, occurs below the first, all right, which is your building supply, and that's concerning. So I'm starting to get quite concerned after this black candle here, and then when it follows through the next day, really that's enough for me to say, look, I'm putting this one in the too hard basket, and I'm going to at least enact a minus 1/3 here, and I might even be more aggressive. But once we break through, and we've talked about this so many times in Ask the Experts, that key middle trough, and this may be a little bit deceptive because there's a tiny one there, but this one here, I hope you can see, is that key middle trough. And once you break that key middle trough, it's pretty much all over from there, okay? So would I buy Telix right now? No, I can't. That option is off the table now. Would I hold it? Well, I can't see any reason to hold it either. I think the trend has changed, okay? Long-term trend's still up, but I think the short-term trend is down, so why would I buy it? Let us keep moving. WZR, this one is for Daniel. I can do this one very quickly, Daniel. I cannot see any of those fingerprints of demand on this one. If anything, all I can see is continued fingerprints of supply. So it's everything that supply is. It's lower peaks, lower troughs. Well, there's a bit of rally here, to be fair. But look at these candles. Geez, it's the supply side is just so committed to this. All right, they're so confident. They're so confident in their supply. They know they want to be out of this. There's no doubt in their mind that they want to be out. And then the demand side is completely unable to respond to that supply. They're unable to say, look, yeah, okay, I'll take that stock. I'll take that stock on because I'm happy to have your risk. Don't forget, if you own shares, you own risk. That's it. Shares are risk. It's as simple as that. Look at every investment as just risk. Do I want to take a risk here? Do I want to take a risk here? Oh, what risks are looking good today? Let me get on Twitter and Facebook and TikTok and let me post. Hey everybody, what risks are looking good today? See what response you get. Everybody's going to be baffled, okay? Investors don't want to take on the risk here. They can't see the value in it. I can't see the value in it either. I'm a pass on that one. Big pass. Curious. Let's see. I doubt we're going to get anything here. Probably just lack of coverage. I'm surprised. We have two brokers covering it, but we have no profits for the foreseeable future. Okay, so yeah, without a decent chart, yeah, if I see no profits for the foreseeable future, I'm okay with that as long as the chart looks good, because the market sees the upside. But if there's no profits and no upside viewed by the market, why would I be positive? Why would I get so excited about something that no one else is excited about? Well, I'm excited about this one. So what do we say? Do we say minus 1/3? No, I don't believe you. I don't. There's no way I told you to minus 1/3 on this last recording. Go check it. I'm sure Andrew will confirm 100% that my rhetoric around this was, if you see this candle, so if this shadow gets worse and you see this candle turn into that, then you would minus 1/3. But I am absolutely confident, because I know I'm consistent in what I say to you, that I said hang on to this. If you don't see that, there's no reason to sell it, and hang on. And there you go. This is a great demonstration of how to think like a trader, not like a mum and dad investor. When things go up, that doesn't mean you automatically get out. As long as there's no reason, no fingerprints of supply in the market, why wouldn't you hang in there? And really, even today, Andrew, there's no reason to get out. Andrew's saying he took some profits between 65 and 70, maybe on this shadow. I don't think that, I mean, the shadow, so when you look at a candle, right, Andrew, so we've got, I call it sort of the balance point of the candle, and we didn't get beneath, the balance point is the halfway point, but we didn't get beneath it. So, yeah, and the other thing I would look for, now, I'm not going to begrudge you your profit, okay, don't get me wrong, but I don't think we got below the balance point of the candle. I think the demand was still in control. And then the next thing I was going to say is, well, maybe you saw a big supply zone from the past, and I can't see that either. So, yeah, I'm going to go with there wasn't really any reason to take profit. There's still no reason to take profit today, but congratulations on the fact you did, of course, and you took some off the table, not all of it, and I think that's a sensible way to go. Because most people would say, hey, this thing was zero, now it's 65 cents. Geez, of course you have to sell it. No, you don't. You only have to sell it if everybody else starts to sell it. Then you sell it. Until then, if everybody's still buying, why wouldn't you hang on and keep partying? Easton saying, hey, Carl, could you please have a look at Telix? I did. Unfortunately, not looking as good. I'm a little bit scared to type this one in. AVR still okay. Still okay. But it's turning the corner, though, isn't it? So the turn is not as dramatic as Telix, but it's still concerning. And I look at this and I don't like that candle there. That worries me, especially after what was a half-decent candle here. And the fact we haven't really taken out the top of that candle. So until we close above that high there, 25.43, I think this one's starting to look a bit shaky. And I also talked about this idea of that sort of that middle trough. And I think that's kind of it. If you look at, in fact, let's do some price action stuff here. So what we need to do is we just need to have a session where I just teach you some of these basics. I know I keep saying that, but who's got the time? So the way I draw my peaks and troughs is I'm looking for higher highs and higher lows to indicate a short-term uptrend, or lower highs and lower lows to indicate the short-term downtrend. Once the short-term uptrend is in place, obviously it will be in place until you see the opposite condition, and then you can draw in your peaks and troughs. At the peak is the highest point between the short-term uptrend and the short-term downtrend. The trough is the lowest point between the short-term downtrend and the short-term uptrend. So here we have, I'd say, an inside day, so we just skip past it. That's another inside day, skip past it. That is a lower high and lower low, so we now officially have a short-term downtrend after what was a short-term uptrend. So assume that we've drawn that, and then we're coming down. This actually would constitute a higher peak and higher trough because we have a higher low and a higher high, and this is inside day. Ignore it. This is still inside to the first candle here, so ignore that. Then we go lower low and lower high, so that we officially now have a short-term downtrend, and it hits here, and then we go back to uptrend, which does switch here, and then switches here, switches here, switches here. This is an outside day after an inside day, so that's fine, but that is higher and that is higher, so we can go with it to here, 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 and then to here. We don't know where, if there's going to be an uptrend. So let me just draw in maybe this bit here. Probably worth doing. That's definitely down. This is an outside day, so skip past it, doesn't take out that high. Here, why is this not working for me? And then to there. Okay, let's go back to here. So the point I'm trying to make is that you have obviously this is what we call, it's obviously it's a peak. We know it's a peak, but it will get upgraded. Call it a long-term peak. Long-term peak. So this is the downtrend. Then we get an uptrend on the other side. So we go long-term trough. Long-term peak. So you can see how, yes, we've got lots of little peaks and troughs, or we call these major peaks and troughs, whatever you want them. I call them LTPs. So you can see the trend is changing because we've got this long-term peak is lower than this long-term peak. Okay. Yes, there are lower peaks in there, but it's about where this uptrend, this new uptrend. So this, you've got an uptrend on this side, right? Downtrend on this side, right? Downtrend on this side. Right, uptrend on this side. So you can see the highest points between these are your major peaks, and the lowest point between these, your downtrends and your uptrends, are your troughs. Now here's the thing. This, let's call this peak, we'll call it 2, we'll call this 1. You see obviously 2 is lower than 1, so you have now building supply. okay, which is a concern, and this is your sort of your last, point of demand, and beneath this, you would have to say that long-term trend has changed. Okay, so this is what we call price action analysis. It takes out all moving averages. It's 100% systematic, so you kind of can't stuff it up. Anybody can do this, and I challenge you to go do it on a bunch of stocks you've traded in the past. I mean, maybe you got it right or got it wrong, but it's telling you what those fingerprints of demand and supply are. So beneath this long-term trough, okay, we would therefore be moving into a long-term downtrend on a price action basis. Right? Because we have lower peaks. So that is a tick. Yep. And we will have lower troughs as well. Okay. And you might say, wait a second, Carl. You don't have lower troughs because this trough here is still above that one. No. We will have lower troughs because once we break beneath, let's call this lower trough 1, lower trough 2, right? Wherever that forms, we don't know where it's going to form. It won't form until you get price action like this. So we come down and you'll have this, and then you'll kick back up with the high peaks and high troughs, right? And that will form this LTT2. So as soon as we trade beneath LTT1, LTT2 has to be lower. Okay, confirming lower peaks and lower troughs, which is therefore trend change. Now note, and I know I'm way off topic here, so far off topic, note that price action analysis, which is what I'm showing you here, is the fastest way of doing your trend analysis because your moving averages are slow. They're slow and cumbersome. They take ages to respond, yet price action is what is going on. All right, so it's a far more responsive tool. And that long-term trend change will occur, I put to you, way before this long-term trend changes, that's for sure. Okay, and probably coincident more with the short-term trend. AVR, I'd say put it on notice, be a little bit careful with it. Long-term trend is still up, but if you're more of a short-term trader, swing trader, I would suggest to you that we've got building supply in the system and demand that is struggling to hold on. That's what I'm seeing in the chart. Let us quickly go here and just have a look at what the potential fundamentals are. And I don't have any broker coverage, Easton, sorry about that one. And I think I've answered your question as to buy the dip or sell and move on. And there's so much stuff we could do in these sessions, but people want their questions answered, so better keep moving. The good news is I've done most of Tim's. Tim's asked for Whitehaven, which I've done. Actually, it has to do with Woodside, which I know is very popular. I like Woodside. Unlike Santos, it didn't do this, right? It just held. There is something incredible, I think, going on here at Woodside in terms of this building demand, and I think you can definitely hold this. And I'm an absolute buy as well on this one. I think this could do quite well. So buy on Woodside, 40% of your portfolio, Tim. Okay, well, I think you'll do quite well out of it. I'm not sure if I agree with it being such a huge holding, especially when you've got the other, keep warm play here of Whitehaven. I wonder what that percentage is. I'm probably less enthusiastic on the other holding here, which is Lynas, which I don't think is terrible. But I don't think is fantastic either. I'm just not seeing that build up. I mean, let's compare the pair. Look at Woodside. See how it's building. It's building towards the right there, and then we go to Lynas. I think it's a little bit more uncertain, especially with that last rejection of 10. I could get to a hold on Lynas at best, but I cannot get to a buy, whereas certainly Woodside and Whitehaven look amazing. And let's look at your last one, which is super interesting, Karoon. And this one, it's almost going up out of spite, really, isn't it? It wasn't high on my list of energy stocks, but it is improving. I could certainly go a very solid hold now that it has reclaimed my long-term uptrend, and it is actually putting in some really nice candles here. But it's not the most. I wouldn't put it in the category of Woodside because it's still looking a bit downtrendy, if you know what I mean. Could I buy it? Look, I think it's a spec buy, but. I don't think it's got the quality that Woodside has. Okay, let's have a look at VML for Marco. How are we going on time? We're getting pretty close. So if I tell you, stop putting in new ones. So the last one there is NickScali, I can see, and then we will stop after that one. And I won't do any more valuations. I'll just try and get through these on the charts. I can do this one very quickly. it's not great, is it? I mean, it's really struggling. And what we're seeing here, if you do that sort of price action analysis, you can see, the broader trends are very much, I think, set to the downside. In fact, the moving averages are confirming. So without the spark, and really the spark is this spark. It's got to be more than just VML. I mean, VML can find its own, its own spark by kicking over the right rock wherever they're trying to do that, in whichever desert they're in. But I think it's broader. I think it's a broader risk on just this, euphoria of chat rooms, and just this huge sucking in of new money, of fresh money, fresh. I call it fresh. You're not going to like me saying this because it is a little bit demeaning and degrading. Fresh meat to the grinder, because I'm basically saying that all punters are the same. That you're all just fresh meat to the grinder as far as I'm concerned. And basically that's how bubbles are created. And eventually those bubbles burst, and unfortunately when there is no more fresh meat coming into the grinder, put yourself in that category or don't, that's up to you. This is when trends go really lousy for these stocks, and they can do that for many, many years until the next bit of euphoria catches on and we get a whole heap of new fresh meat to the grinder. I apologise if that made you upset, but at the end of the day, either you're the meat or you're the person making the sausages, aren't you? So decide which one you want to be. Let's have a look at the next one, FFX, which is not back yet, is it? What's the last trading day here? I haven't followed it. Still June. We haven't done analysis on this one for a while, and don't worry, I wasn't predicting it was going to rally back up there. I was predicting that could happen, but it was very unlikely to happen. We don't know what's going to happen until this one comes back, so we'll keep an eye on it. I was castigated last time I commented on Firefox because I didn't realise it was in a trading halt, and I said it looks terrible, supply demand, I can't see it go back up, and lots of people say, hey, it's in trading halt, you idiot. Okay, fair enough. I still don't think it's going to go up. LAU is wonderful. Well, there you go, Andrew. Take a look at, maybe responding to the fact I randomly found it. Take a look at LAU's fundamentals when you can. Look pretty interesting. Let's do that, because this was a total accident. We were not supposed to see LAU today. So let's check it out. Wonderful chart. What do the fundamentals say? Andrew says they're good. We have two brokers covering it, one strong buy, one hold. Let's have a look at the earnings. We've got earnings per share. We've got some growth. Let's get it right. So let's pull this one back to here and change that to 3. It's still not huge though. What is it? Sort of 2% compound annual growth rate. The PE is quite low, and low by historical standards. So maybe, I don't know, what do they do? They're cycling some sort of earnings bump here, aren't they? Is what it's telling me. But at least they're going to hold on to those earnings. Okay, so here's the earnings bump. Sort of 1.836, but hanging on to it, not terrible. Let us go low risk. I wouldn't have a clue, but probably low risk of getting 2% compound annual growth rate. So I'm happy to stick with that. What's the right PE? Well, I don't think it's 15. It's hard to say because it was 20, it was 30, and now it's 9. It's very hard to say on that. What would I pay for 2% annual growth rate? Well, I couldn't go more than 10. That's in a fit. I'm not so sure I'm not sure it's a bargain. It's got a massive dividend yield. A real conundrum of a stock. I'm happy to defer to the chart in that one, Andrew, and say it looks amazing. Would I buy it up here? Well, no, I need to see. We talked about this. Let's see how it pulls back to the value zone, and then what candles it puts in there. It looks a bit sketchy in terms of liquidity, so do be careful on these less liquid stocks. Thank you, Carl, for explaining BCB. Good. Yes, it's looking to get into thermal coal. Well, that could change things for them, Ajit. Okay, so keep an eye on those developments. If they do, that's going to be great for them. MQG. Oh, I don't like this. I've been bearish on Macquarie. I've called it a sell, and it's been very stubborn. Macquarie, it has not been, doing me right. But I think I'm going to be right on this one. I think I'm going to be right here. Yeah, buy, hold, sell. I would not buy that in a fit. Would I hold it? No, I can't even hold that. I don't like this gap. This black candle's so solid, close on the low, and then this gap, and this candle's looking very solid here too. And it's taken out that low. I think this is going down. I'm going to retain my sell on Macquarie. Oh, I said I wouldn't look at the fundamental valuation. Sorry, I'm going to have to do it because I'm very curious to see what this is. Bear with me. If you have to go, you have to go. Let's check this out. Macquarie Group, we obviously have had our results come in. So we will move this here and change that to 4. 4% compound annual growth rate is pretty anemic. I wouldn't go more than 10 on that, that's for sure. Change this to March, and we're not getting anything that looks very good here. You know, it's trading at a PE in the, you know, so it's trading at 16 times next, 14.5 times this. Historically, it's traded higher, but should it trade higher? You know, historically, growth was probably higher. I just don't think it deserves to have a PE of 16, and that's what my model is saying. My model is saying, well, if your target caps out at 10, right, for a stock that has growth of 4% compound per annum, and this is good, like for a stock that has so little growth, you should only pay $99. And I can't see what these guys are saying. I can't see what the brokers are seeing here. It's beyond me. A company with that little growth, I don't think should be trading on those multiples. Why? Why? Because it's such a quality stock. Is it? I don't know. Maybe. Hey, I heard that this one was a quality stock as well. NCK, you know. And look what happened to it. I think this is looking good. I'm happy to hold on to that one, Chris. I still think it looks. I think it's coming back here. I think it's doing some good work. The only problem, Chris, is you're going to find a bit of supply in here probably, and maybe that's what we're doing right now. Is that we're just starting to interact with that zone. So it could get a bit tougher from here in terms of this recovery. I'm not sure if you want to play that game. I can go hold on the basis of the nice short-term uptrend, a couple of really good candles here, trying to change the long-term trend, but I don't think it's a buy at this stage. I just think if you're buying something, try and find something that has as little resistance, near-term resistance as possible, okay? This one is for Andrew. I'll entertain it because he always gives me good charts. This is a monster. So I would buy this today. Yeah, this is a buy for me. This is a screaming buy for me. It looks so good. The only issue here is this, but I just think it's dealing with it, and we need to wait because this candle could end up being one of these, Andrew, as you know, and then it would tell me that no, we just have to give it a little bit more time. So we like it; it's 100% on our radar now. But if we see, and if we don't know, if we see that candle turn into this, okay, then it would cause reason for pause. But if we hit this expected supply zone with that candle as it stands now, there's no supply there. There's only demand. And think about those words. There's no supply. There's only demand. Nobody wants to sell this. Everybody wants to buy it. Compare that to a bunch of the stocks we talked about today. That's where I want to be. I love it. I love it. I think I was supposed to go to NickScali, wasn't I? Gee, he squeezed one in. 360. All right, we'll do it. And then this is the last one. A little bit like the NickScali chart, isn't it, Ajit, where we're seeing some nice things happening in terms of the trend is changing, but we're just starting to lose a bit of momentum here. Okay, so just be careful. Actually, better than NickScali because the upside is perhaps a little bit more. Let me check this one. No, that's where we're struggling. We're struggling at these supply zones. I could get to a hold, but even then I think it's losing enough momentum to rethink my strategy, even on a short-term trade here. But I cannot get to a buy on this one. Okay, that's it for today. We could go on forever, but we can't, okay, because the Think Markets weekly meeting that I'm supposed to be in 8 minutes ago has already started, and I better get there. But come back on Tuesday next week at 1 p.m. And we'll have another go. And I know a lot of people asking questions for the first time, and you know sometimes it takes you a couple of sessions to get the confidence to ask one. But please ask those questions. I'm always happy to help out in any way I can. And Think Markets are always happy to help out as well. If you're not a client of Think Markets, well, you should be. We've got all the products you need to trade at great broking rates compared to the bank. You know, if you're trading with CommSec or NabTrade, whoever they are right now, you're better off with us. So head to thinkmarkets.com/au, open up an account. You could be trading in minutes. If you are new to us, we do have an offer going at the moment. Press pause if you're watching me on YouTube and have a good read of that, or contact the email on screen. If you're already a client of ours, you know this because you're hanging out with me and Ask the Experts every week forever. Refer 4 friends and you can get up to a year's worth of free trading. There are terms and conditions on both of those offers. As I said, head to the website for full details. If you're watching me on YouTube, hit the subscribe button to get notified of my next video update, and please hit the like button to let me know you like what you're doing, so I'll continue to do more of it. Apart from that, it was such fun chatting with you today. Hopefully you learned lots and had lots of fun as well. All the best for your trading. Until we catch up again. Bye-bye for now.